expectations are. On growth, we are, in a way, just to set the context, Sri Lanka has done remarkably well in the last 1 year. And the recently concluded the third IMF review sort of highlights that point again, that the Sri Lanka has met nearly all its structural benchmark which was set in the program. If you look at our forecast for this year and going ahead for the next 2 years, we are looking at a base growth number which is closer to 3.5% and which could exceed, and there is a lot of catch up, etc., to do in terms of growth numbers. So, if you look at the real numbers, 2022 2023 cumulatively, Sri Lanka's GDP in real terms contracted by around 10%. This year, of 2024, the forecast is going back around 5%. So, next year, if we grow around 3.5%, in real terms, we are still sort of back at 2021 levels if there would have been a normal trend growth in Sri Lanka at around 3%. So, in fact, below those levels. So, there is clearly room to catch up. Clearly, if you look at in terms of which sectors would grow, probably last year we had seen or in 2024, the investments were the key drivers of growth. And the growth numbers were high statistically because of the deep contraction which investments or industry saw in 2023 and 2022. So there is again a catch-up story. So if you look at the real terms, construction is still 35% below the 2019 levels in real terms. So we are still much below at those levels, and as a result, with the IMF program in place, we do expect Sri Lanka to keep exceeding the 3% target which IMF has set them in the program for the next 4 to 5 years. Because IMF forecast, if you look at till 2029-30, the growth numbers are closer to 3%. On inflation side, clearly given the adjustments to the fuel as well as the key is the electricity prices. The deflationary environment, at least the inflation would remain in the deflation zone, at least in Q1. It goes marginally up in Q2. But one, we have to look at the price levels. Last 2 years, at least the price levels have gone up by 70%. So while there is a deflation, and we obviously don't want deflation in the longer term, the price levels are significantly higher. And if you look at the 2 to 3 year horizon. But having said that, given the base effects will again come into play, in Q3 and Q4, we will see inflation going higher, especially in Q4, we will see inflation going higher than 5%, closer to 6% or higher in Q4. Again, a lot will depend on how global commodity prices, etc., play a role, but inflation likely, and that will be a peak period where we will see inflation exceeding central bank target, but not on an annual basis, on a quarterly basis. If you look at and that what that provides is most likely we will see central bank remaining on hold in the second half. Because if you look from the central bank perspective on a 1 year horizon, the inflation is looking closer to between 5 to 6%. Average would be lower. Average is around would be closer to 4%. But the point inflation is higher than 5%. Policy rates are 8%, and if you look at various estimates, including IMF World Bank estimates, neutral rates they estimate for Sri Lanka around 2.5%. So we are very close to those levels if from a 12-month forward-looking perspective with policy rates at 8%. On fiscal, again, there is we do expect government to stick to the fiscal deficit targets. There could be some shortfall in the revenues, especially in terms of tax collection, but we have to be also cognizant of the fact that this was the expectation even in the last 2 years, when we were expecting the government to fall short of revenues, but government ended up meeting those revenue targets. We have to see what happens this time. We do expect some bit of shortfall, but that should be able to, that the government should be able to meet the fiscal deficit target by cutting some of its expenditure, especially on the CapEx side. Not an ideal scenario, but we do expect government to stick on the fiscal deficit as well as deficit targets. If you look at the debt levels, now IMF forecasts Sri Lanka's debt to GDP at around 110% for next 2 years. 110% is still a very high level. But having said that, given the base effects will again come into play, in Q3 and Q4, we will see inflation going higher, especially in Q4, with policy rates at 8%. Because of the difference in our growth forecast and the currency forecast, which we also talked about, we are looking Sri Lanka to meet its debt levels of more than 100%, which IMF expects in 2029 by 26-27. So roughly around 2 to 2.5 years ahead of IMF in June. If the government sticks to the fiscal deficit targets, the debt to GDP or debt sustainability target, Sri Lanka should be overachieving in 2027 compared to 2029. Again, having said that, we are still far away from what the debt levels were in 2019, and all the gains which are being made in the next couple of years will have to be secured going ahead. So, sticking to the IMF program is key, despite it being not convenient, but we will have to stick to it. On the external sector, things have clearly improved. Tourism remittances, again, it's a pretty well known story, but even in terms of debt restructuring, the debt repayment schedule, if you look at least the payments are pretty much under checked till 2027. So around $600 million is what is likely to be paid. Then thereafter it goes up closer to $1 billion, but that happens in 28, 29, and then in the best case scenario, where Sri Lanka meets the topmost estimate, which is around $107 billion of average nominal GDP, that's where the peak, it's likely to be lower, but the peak outflow in terms of external debt to GDP would be around $3 billion, slightly more than $3 billion in 2036. So still there is some time for Sri Lanka to meet, to see those kind of outflows. In the meantime, we do think that Sri Lanka will meet its FX reserve target for this year. So IMF has set an FX reserve target of $7 billion. We do think those are pretty much achievable targets, especially if Sri Lanka meets its IMF revenues, IMF set target. So this year one review is already completed, but there are two more reviews which are due. If those two reviews are completed, coupled with the flow which will happen in March, as well as what multilateral flows it could generate, the multilateral flows inflow this year is around $1.7 billion. That will help Sri Lanka meet its target, and it would actually exceed its target in terms of its reserves if the vehicle imports are much lower than what was its budgeting. So that remains to be seen, but that's